Hello and welcome. Have you ever wished you could just peek inside a company's brain and see what's really going on? Well, we can't do that, but financial accounting is pretty much the next best thing. It's the key to unlocking the true story of any business, big or small. So let's dive right in.
Think about it. You're looking at a company, right? Maybe you want to invest in it, or maybe you want to work there. From the outside, it's kind of like a black box. You see the products, the marketing, but is it actually healthy? Is it growing, or is it secretly a sinking ship? We need a way to look inside. And that is exactly where financial accounting comes in. It's the tool that cracks open that black box. And it's not just for accountants in back rooms, it's for literally anyone who needs to make an informed decision about a company. And what's really cool here is just how many different people need this info. You've got investors, obviously trying to make smart money moves. But you also have employees trying to figure out if a company is stable. Even customers want to know if the business will be around in a few years to support what they bought. They all rely on the same thing, accounting information.
Okay, this right here, this is the most important idea to get your head around. Seriously, forget about complicated math for just a second. At its very core, accounting is a system of communication. It's a universal language designed specifically to tell the story of what a business is doing and, how well it's doing it. And today, we're going to learn the basics of that language.
Now, every language has grammar, right? A set of rules that holds everything together. Well, in the language of accounting, the fundamental piece of grammar is something called the accounting equation. It's a super simple but incredibly powerful rule that can never, ever be broken. The first piece of the puzzle is an asset. And don't let the fancy word fool you. It's just all the valuable stuff a company owns and controls. We're talking about the cash in the bank, the computers, the factory equipment, the trucks, the inventory sitting in the warehouse, all of it. These are the company's resources. Of course, a company doesn't always own all its stuff free and clear. And that brings us to a liability. This represents a claim that an outsider has on those assets. Think of a loan from a bank or money you owe to a supplier for materials. It's basically the company's debts to other people. And finally, we have stockholders' equity. So if liabilities are the outsider's claims on the assets, then equity is the insider's claim. This part belongs to the owners, the stockholders. It's their slice of the pie. It's what would be left over for them if the company sold everything it owned and paid back everything it owed. And boom, here it is, all together. This shows that unbreakable rule perfectly. On one side, you have the assets, all the company's resources. On the other side, you have the liabilities and the stockholders' equity, all the claims on those resources. And they must always be equal. It's a perfect, logical balance that is the foundation for everything else in accounting. Okay, so now that we've got the grammar down, let's start reading the story. And chapter 1 is the income statement. This is the part of the story that tells us about a company's performance, and most importantly, whether or not it actually made any money.
So, the most crucial thing to understand here is that the income statement is not a snapshot in time. It's more like a movie. It tells you the story of what happened over a specific period, like a month or a quarter or a whole year. It adds up all the money the company made, its revenues, and then subtracts all the costs of doing business, its expenses, to get to the bottom line. Let's look at a quick example. This is the income statement for a company called Eagle Robotics. As you can see, they brought in $375,000 in revenue at the top. Then they subtract all their costs, what the goods cost them, operating expenses, taxes, and way down at the very bottom, you see the results, a net income or profit of $45,000 for that month. That's the story of how they performed. All right, let's move on to the next chapter and see how this all builds. So if the income statement was the movie telling a story over time, our next report, the balance sheet, is a photograph. It gives us a picture of the company's financial health on one single specific day.
And what does this photograph show us? Well, what do you know? It's our old friend, the accounting equation. The balance sheet is literally just a detailed list of all the company's assets on one side and all of its liabilities and stockholders' equity on the other. It's the proof that the fundamental equation is holding true on that specific date. So let's look at the balance sheet for Eagle Robotics, taken on December 31st. On the left, you can see their total assets add up to $1,650,000. And on the right, their total liabilities and stockholders' equity also add up to exactly $1,650,000. See? Perfect balance. It has to work every time.
There's one more major report we need to dig into. A company can look profitable on paper, but still go bankrupt if it runs out of cash. It happens all the time.
So we need a way to follow the actual money. And that's the job of the statement of cash flows. This statement is so important because profit is not the same thing as cash. You can make a sale and book the revenue, but if the customer hasn't paid you yet, you don't have the cash. This statement gives us the real story. It answers two simple but critical questions. Where did the cash come from? And where did it all go? It's the ultimate reality check. Okay, so we have these three separate reports, right? The income statement, the balance sheet, and the statement of cash flows. And they're all useful by themselves, for sure. But the real power, the magic of it all, is revealed when we see how they connect to tell one single cohesive story. First, there's this really critical connecting piece, the statement of stockholders' equity. You can think of it like a bridge. Its whole job is to show how the owner's piece of the pie changed over the period. And look closely at this line here. Add net income for the period. This is it. This is where the profit we saw in the income statement flows in and directly increases the value of the owner's stake in the company. And here it is, the big picture. This is so cool. Just follow the arrows. First, that $45,000 of net income from the income statement flows right into the statement of stockholders' equity. Then, the final ending balance from that statement flows over to the balance sheet. See? It's not three separate stories. It's one interconnected narrative. Everything talks to everything else. So you might be thinking, okay, that's a neat puzzle, but does any of this really matter in the real world? The answer is a resounding yes, absolutely. Just look at this chart. That red line shows the stock market returns for companies that had big increases in their net income over 10 years. The black line is for companies whose net income dropped. The link between these accounting numbers and real-world value is undeniable. And this isn't some secret trick either. This is what the experts use every single day. This survey asked financial pros how important these exact statements are for doing their jobs, like figuring out a company's value or assessing its risk. And across the board, they rated them as very important. This is the standard toolkit for making huge financial decisions. And that really brings us to the big final idea. This whole process, this language of business, it's about so much more than just crunching numbers. It's about taking all the messy, complicated, chaotic activity of a business and translating it into useful, reliable information. And that information is what allows all of us to make better decisions, which ultimately helps build a stronger, more prosperous society. You now have the fundamental keys to unlock the story inside any business. So the question is, where are you going to point this new lens? The next time you look at a company, you'll know how to read its real story. Thanks for joining me for this explainer.